Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
All eyes on Jackson Hole as the Fed kicks off its economic symposium. It's the flagship event for the U.S. Central Bank. Fed Chair Jay Powell set to speak tomorrow. Before that, former Federal Reserve Governor Betsy Duke was on Bloomberg surveillance earlier today. She gave her expectations for the chair's speech Friday at the symposium.
Jay Powell, in terms of his legacy, is looking at what happens to his mandate, what happens to inflation, what happens to employment, and how well does he manage that. It's not any single speech. He's going to focus primarily on the decision framework and not give any indication of where he's leaning for September. Inflation expectations are going to be the key over the next year or two. If inflation expectations get out of line, then the Fed will be very concerned.
That's Betsy Duke, former Fed governor, on Bloomberg surveillance earlier today. Joining us now from Jackson Hole, Wyoming, is Bloomberg surveillance co-host Tom Keene. Tom, the event, it's supposed to be about policy, about economics, about this economy, but happening at the same time, the Justice Department signaling possible plans to investigate Federal Reserve Governor Lisa Cook. How is that hanging over the event?
Oh, it's hanging over. It's the exact correct language. There's no question about it. You still have the normal cadence of Jackson Hole. For example, there's 6, 7, 8 papers that come out. Michael McKee prints them out perfectly, and he reads every page of the academic papers. Guess what? I don't do that. I'm talking to the reporters here gathered, and you're right. At the top of the pile of topics here is Lisa Cook.
So I spoke to Mike earlier. He said she's expected to arrive. She hasn't arrived yet. Does it take away from Fed Chair Powell's message tomorrow? Does it distract from what he says about this economy and what he indicates or not about September?
It's a really fair question. I don't think so. I think Michael McKee, who's better at this than I am, would say exactly the same thing. What is different here, and our Simon Flint in Singapore absolutely nails it in an essay today, what's different here is the hard facts of the moment are catching up with the chairman. I don't know if they're rewriting the speech tonight with the stars out above the Tetons, or maybe they're writing it on the airplane. But what is very clear here is the hard facts, as Mr. Flint says, have caught up. You have the economic data today. You got concern about inflation. And Tim, the number one thing I'm watching off the Bloomberg here is the 30-year bond. Once again, we're making a dash up near 5%. That's a kind of inflation whispers that have to change the speech.
Tom, of course, you mentioned the chairman will speak tomorrow at Jackson Hole. Can you just tell us a bit more about what attendees are really looking to hear from him?
It varies every year. There was one year here, I'm going to say 3 years ago, I can't remember, where we were prepared for a 15-minute, 20-minute speech, and I believe he spoke for 8 minutes. So every year is different. I think the pageantry will be here. There'll be an international audience here. Christine Lagarde or Mr. Nagel of Germany is here. Bailey of the Bank of England scheduled as well. But what's interesting is within the pageantry, what do you expect from a speech? And the answer is they'll be looking for certain nuances and certain single sentences that will be different. What you're not going to get a lot of is what's he going to do in September. That would be rude. He's not going to do that here.
You mentioned a lot of those international voices. I mean, the ECB, we've got Bank of Japan, emerging markets. How are they playing a part of the conversation this year in particular?
Nora, you know my theme. You're already stealing my theme as we go to tomorrow with Lisa Abramowitz. To me, the international angle here is the importance point. William Rhodes, Bill Rhodes of Citigroup, iconic at Citibank, it was called Citibank back then, had this great phrase, central banker to the world. He took it from academics. This is a Jackson Hole where Jerome Powell is the central banker to the world, is he defends delicately the way we've done banking for years, pushing against President Trump. The theme internationally here of central bank independence will be key.
I think also the theme of labor, Tom, and it's something that we've spent a lot of time talking about. in recent weeks, especially since that shocking report came out earlier this month about those numbers for the month of July. And it's really shifted the conversation about what employment in the United States and what healthy employment numbers look like in the United States, where borders are closed, immigration, legal and illegal, is down, and growth among American families is not what it was a couple generations ago. What does that picture look like in terms of reshaping the American workforce?
Well, and reshaping the speech as well. It's a movable feast right now, Tim. The number one thing is we've seen a trend in the data. The conceit is labor data always lags. Okay, fine. And we've seen this trend, including continuing claims today. Bramo put out on Twitter, I was, stuck in an airport somewhere. Bramo put out on Twitter that great continuing claims chart, which shows this explosion up in the weekly data. That's the kind of tea leaves that gets a Fed to shift. President Trump wants them to shift quicker. And let's remember, we've got that jobs report early September before Mike McKee's in that press conference, September 17th.
Well, I want to just talk about the energy. I mean, you've been to so many of these symposiums. What's the energy like on the ground this year in particular?
Quiet. First thing I noticed when I walked in, there's a whole new quiet tone to it. Mike McKee and I remember August of '07, which was, I think, I'll say 7 days after LIBOR OIS went out 4 standard deviations. This place was chaos. My guess is a lot of people are coming in tomorrow morning, and tomorrow morning here at the Jackson Lake Lodge will not be quiet. There'll be a real turnout for the speech. With that said, it's one part academic, but it is one part about this attack on the central bank by President Trump.
Tom, I'm going to have to leave it there. We're going to speak to you throughout the next couple of days. Appreciate your time, and we're glad you arrived safely. I know it was a long journey to get there. Tom Keene, Bloomberg Surveillance co-host out there at the Jackson Hole Economic Symposium. Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, also watching the Economic Symposium in Jackson is Ali McCartney, Managing Director of Wealth Management and Private Wealth Advisor with Alignment Partners at UBS. She and the team manage just over $1 billion in assets. She joins us from Rehoboth Beach, Delaware this afternoon. Ali, good to have you back on the program. What do you think Fed Chair Jay Powell will communicate tomorrow?
I think, as usual, he will probably not communicate exactly the things that the market is looking for. But I think that what he will communicate, you just spoke about briefly, which is this tension between the dual mandate, specifically that they are now looking more at weakening, softening data in the labor market than they are at long-term inflation expectations, which although Tom talked about the movement in the 30-year, seem to be quite consistent. The last thing I'll leave you with is to remember that last year was, in a sense, quite an epic meeting, and that was the beginning of the long-awaited pivot. I think that this meeting will be, in a sense, less revelatory than that one.
When we look at the market performance this past year thus far, it's up about, we have the S&P 500 that's up about 8%. Of course, that's a bit different from what we saw of the past couple years where we were seeing double-digit gains to end the year here. So what do you think the market really needs to hear to maintain this momentum here as we go into the second half of this year?
So I think we're in a bit of a waiting game, right? That's a normal thing in late August. Volumes are really low. People are on vacation, less trading. We also happen to be awaiting Jackson Hole on Friday and NVIDIA earnings next week. NVIDIA being the largest contributor from a market cap and from an earnings perspective to the S&P 500, and that being the conversation that is being discussed now about, has AI pulled back, which have been driving the market. My sense is that from an equity perspective, as you said, we've had 2 years of 20 plus year returns. We, are up 30% from the tariff day low and 10%, as you said a couple of days ago, year to date. And we're at multiples that we really have only seen twice, certainly in my trading life, the first being, one very unique day during the pandemic and the other during the height of the internet bubble. So, what we need, I think, is stability to keep us in this range and going higher. And I think the bull market will remain intact. I think it will likely be driven by continued expansion in the AI trade, both in terms of infrastructure, buys and builds, data and power, picks and shovels, both margins going up and productivity going up. And I think it'll also be very much supported by a decreasing interest rate cycle. But we're certainly in a more precarious position than we have been in a number of years from a multiple perspective.
Ali, I'm trying to figure this out, and I'm hoping you can help out with this. It's something I've been thinking a lot about lately, and it's this idea of a weakening consumer. And in just a few minutes, we're actually going to be speaking with the CFO of Kava, Trisha Tolliver.
Yeah, I heard that.
Yeah, so Kava stock fell more than 20% in a single day last week because the company pulled back its guidance, essentially talking about a fogginess with the American consumer out there. At the same time, you have these high margin AI companies that are essentially just printing money, whether we talk about it from an NVIDIA perspective or from a Meta Platforms perspective, with margins such as those. What's the tension there in a world with a weakening consumer?
I think you nailed it. I think that bifurcation and that tension really exists. I think it exists in terms of goods and services. I think it exists in terms of consumer discretionary versus staples. And I think it exists in terms of, the vast difference in wealth and earning potential in this country. So what I am seeing in my high-end clientele who are looking at portfolios that are the highest they've ever been, and what I'm seeing in my own neighborhood, is the same. People are definitely more reticent to spend, both simply the cost of goods and the tariff implications, which we're starting to get wind of, are real. And people are going to have to make choices and decisions. The consumer has managed on all levels to hold up extraordinarily well. It's like the little engine that could, but it cannot last forever. And so I think that the next number of quarters, there is going to continue to be exactly what you said, which is this bifurcation in many ways that you slice the data, whether it's demographics, whether it's earnings, whether it's sector, between the haves and the have-nots.
What are the opportunities here in the market? How are you advising your clients? What's a safe haven trade right now?
Yeah. So look, I think all of this year, it has paid to be diversified, which has not been the case in a very long time. So you see right now, you see equities that have recovered and gone up, no matter which area you're looking at and which geography largely. You see gold, which has done its job at protecting, but also continues to provide upside. And you see fixed income, IG in the US trading at 25-year tights as people try to get ahead of the Fed moving down. So there are a lot of opportunities. However, each is very expensive. So I think the first is to continue to be diversified. And even though it feels like things are expensive, to continue to be invested. The second is to look for areas that still have room to grow from a relative perspective, whether that's healthcare, whether that's utilities, which can also provide some defense, whether that's financials, which again are trading high, but have a number of tailwinds from a regulatory and an interest rate perspective. So there most certainly are opportunities out there. But, what we've been finding, and what we've been especially finding this week, is it may not be the time to play all beta or buy the S&P. This may be a time to be much more discreet and disciplined about what you buy and when you buy it.
We only have about a minute left, but I was talking to a colleague a little earlier, and she sort of explained the sense out in Silicon Valley right now when it comes to the AI and the AI race and what private companies are doing. And she described it as being on this roller coaster, but there's this lack of understanding about where we are on the roller coaster on the way up, if we're close to the top or not. Are we?
It's a really great question. And I have found in my career, being both on the East Coast and the West Coast, that there is always a difference in opinion, ebullience, and understanding of various technologies that are, coming out of Silicon Valley. I think that we probably remain in the second, early third inning. We are not even close to there yet. What I think the major difference is by people that live, traffic, and work out there is that they are thinking many steps ahead in terms of large-scale effects on data, on businesses. Whereas I find that my clients and the people that I work with on Wall Street, outside of, let's say, the analyst community, are much more focused on sort of large language models, ChatGPT. And that's why I think there is extreme room to run in the next decade.
Ali McCartney, Managing Director, Wealth Management and Private Wealth Advisor at Alignment Partners at UBS. This is Bloomberg. Stay with us. More from Bloomberg Businessweek Daily coming up after this.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
There's been this renewed interest on rare earths and critical minerals as trade tensions between the U.S. and China have flared up. On that, we've spent quite a bit of time over the last few months talking about them with CEOs of companies in this space. Jim Litinsky over at MP Materials, whose company is set to have the Defense Department take a $400 million preferred equity stake. For more on rare earths, we're joined by Oliver Friesen, CEO at Guardian Metal Resources. It's a London-based metals exploration and development company. It's looking to bring production of tungsten back to the U.S. Oliver joins us from Toronto. Oliver, we've been learning a lot about rare earths lately. I think my geology 101 professor would be very happy with what we've been talking about. We had Gary Evans from U.S. Antimony on last week talking about the importance of antimony when it comes to ballistics. That was something that was new to me. Your focus is tungsten. Why is tungsten important? Because it's not classified as a rare earth.
Yeah, well, first of all, thanks for having me on, Tim. It's great to be here to talk more about tungsten. Funny enough, you mentioned antimony and the use within munitions and ballistics. It's the same reason you need tungsten. Tungsten is one of the most dense metals on the planet and also has the highest melting point. So it's been used in the production of munitions for decades and decades and decades. Now, that's just one small use case, but effectively, when you look at the entire critical metals supply chain, if even one of those metals isn't there, that can shut down manufacturing in the United States of America. So it's important that we focus on not only just rare earths, which, as you mentioned, are very important, antimony, but tungsten is definitely up there, considering the fact that we're very reliant on unfriendly adversaries for global tungsten supplies.
So I want to talk a bit more about your company in particular here. Which end markets, maybe EVs, defense, renewables are really driving the most urgency for your business right now?
Yeah, I would say probably the most urgent use case is across defense. Because of that density, it's ubiquitous and it's very important in the production of munitions and things like tank armors as well. So really right now, given the geopolitical landscape, we're seeing a huge amount of a surge in demand and increasing demand across the defense industry for this metal. But as you pointed out, it's not just a defense metal. This is a metal that's used in a lot of other industries. Some that come to mind: aerospace, automotive, green energy is another one. It's a really important metal. It's almost irreplaceable in a lot of these technologies. So defense is driving the narrative right now, but at the same time, we're hearing major manufacturers in the United States of America are actually saying we can't get this tungsten, and if we don't get it, we're going to be shutting down.
So the Pentagon in July provided a $6.2 million award to Golden Metal Resources. It's the U.S. unit of your company to perform a pre-feasibility study for a tungsten mine near Hawthorne, Nevada. Is this all the financing that you will need? Will you need more from the DoD? Will you need more from the government? Will you need to raise more?
Yeah, so it's part of the puzzle for sure. So that $6.2 million award that we've received from the Department of Defense, which obviously we're very grateful to the current administration for that award, will cover some of the key engineering work streams as part of that PFS study. But you're right, there are other expenditures associated with bringing that project and our projects into production. But concurrently with that award from the Department of Defense, we raised $21 million US dollars, predominantly with existing shareholders, almost all institutional. So we use those funds to then cover the other additional costs, and all the funding combined. Really, the focus is on delivering two key tungsten mines to the U.S. market, of which it's a metal the U.S. has not mined for over a decade.
Do you need government support when it comes to this project?
No, we don't. For instance, we acquired Pilot Mountain, which is a project that's received the award from the Department of Defense almost 5 years ago. So it was a much different market then. The landscape was much different. And even at that time, we acquired it because we felt like it would be an economic tungsten operation at previous pricing norms, which is around $300, what's called a metric ton unit, or about $30,000 a ton. That being said, the price, fast forward 5 years, China has completely banned the exports of all tungsten to the U.S. market. The price is closer to $50,000 a ton right now. But even at historic norms, this project and our projects, we believe, make sense. But obviously, the tailwinds we're seeing now across the federal funding landscape, but also permitting, gives us that much more confidence to push these projects forward and deliver mines in America to the U.S. industrial base and defense partners.
Oliver, let's talk a little bit about China. You brought it up here. How do you see China's dominance in the rare earth processing shaping your strategy here?
Yeah, no, it's a really good point, Nora, and I'm glad you brought it up, because what sort of sets tungsten apart from, the antimonies and the rare earths, as we've discussed, is the fact that the downstream processing capacity actually fully exists on U.S. soil. It's one of the very few critical metals of which the U.S. has the ability to actually take what's called a tungsten concentrate and turn it into actual usable finished products for defense and for industry. So the benefit that we have is that the only thing missing in the U.S. right now is a domestic mine source. We import in the U.S. all of our concentrates from other countries. And just to give you a data point, China, Russia, and North Korea combined represent 90% of total global supply of tungsten. Just let that kind of data point sit in. But the thing that's missing right now in the U.S. is the mine supply. The processing is there. So as soon as we can plug in our two Nevada-based tungsten mines, you have a fully circular tungsten supply chain that exists within the bounds of the United States of America.
So where do you see demand for rare earth materials and all of that just more broadly over the next, say, 5 to 10 years?
Yeah, so tungsten specifically, we're seeing very, very healthy compounded annual growth rates across the different sectors that need it. Defense is certainly leading the charge right now. We're seeing the EU and NATO and the US, defense budgets up across the board. So that drives the demand for tungsten, as you can probably imagine. But also, we mentioned automotive, aerospace. These are all other sectors that are the demand for tungsten is increasing quite considerably. So we're seeing healthy growth across the different growth areas. And another use case that many of your listeners probably are not aware of is nuclear fusion. So not to be confused with nuclear fission, but effectively trying to harness the energy of the sun here on Earth. And the only metal with a high enough melting point to contain a nuclear fusion reactor is tungsten. So we see longer term considerable demand growth from this very important energy supply technology that should be coming in line in the next couple of years here, or next maybe decade.
One of the most read stories on the Bloomberg terminal this week was about the Trump administration, or President Trump's new brand of economic statecraft. Deals like, we might see with Intel, for example, or the Department of Defense deal with MP Materials. You could throw other companies into that as well. AMD and NVIDIA with 15% of certain chip sales in China going to the government, maybe even U.S. Steel with that so-called golden share that the U.S. government has with U.S. Steel. What's, in your view, because you've taken some money from the government this year, what's the difference between a deal like the one that MP Materials got, in which the DoD will take a stake, and the stake that the Trump administration is contemplating taking in Intel? Do you see a difference in those deals?
Yeah, for sure. So the MP Materials deal is pretty groundbreaking for the sector. And I think this is really a strong signal to the U.S. critical metals industry that the administration is serious about mined in America, which is really encouraging to see. So the MP Materials deal, there's lots of different parts to that. One of them is the price floor, the direct investment, and also the federal award as well. So we've received just an award. So this is money that we can go and use to fast track key engineering steps as part of our project. But what I'll say is that there's speculation that some of these unique and new sort of benefits that MP has had with this deal could be applied across the sector. So effectively, the doors have opened up for this type of deal to be done across the defense supply chain, but also the critical metal supply chain. So anyways, I think that all in all, it's a really strong signal to the market. It's a really strong signal to myself as a CEO of a critical metals company that the U.S. administration is serious about mines in America. And that obviously means that we have these projects at exactly the right time and trying to deliver this key metal to the U.S. market.
We're speaking with Oliver Friesen, the CEO at Guardian Metal Resources. It's a London-based metals exploration and development company that's looking to bring production of tungsten back to the U.S. Oliver, you mentioned the door is open. Is your door open for an investment from the U.S. government where the government or the Department of Defense would actually take an equity stake in the company? Would you welcome that?
Of course, yeah, we'd more than welcome that. Like I said, all we have right now is the award from the DoD, which is incredibly important for the business. But our goal here is to deliver these mines to the U.S. market. So anything that we can do to help get support from the current administration and across the industry, we will absolutely have that conversation. But the time is so critical right now. Like I said, the U.S. has no domestic mine supply. And we believe that we are the leading company when it comes to tungsten exploration development. So we're absolutely looking to have any conversation that will help us get to our goal quicker.
Are you having conversations right now about that?
I can't speak to that. What I can say is that the award that we received from the Department of Defense was only about 3 weeks ago. So we're now really focused on getting that money and focusing it in the ground and towards creating U.S. jobs at our projects. So that's the focus right now. But obviously, we're looking to tap into any tailwinds that can be available to defense and critical metals companies that are focused on U.S. projects.
Oliver, how do you navigate trade tensions and resource nationalism in markets where you operate?
Yeah, I mean, we try not to get too focused on that. It's there's a lot of noise out there. There's a lot of movement across tariffs and trade relationships right now. I think the main signal to our company and to myself as the CEO is that there's a huge push for mines in America. We want to see these metals actually being mined on American soil. So we try not to get too kind of caught up in the day-to-day. We have a job here, which is to deliver these projects to the U.S. market. But it's encouraging to see some of these things that I think really, once again, point to the fact that the current administration is very focused on mines in America and nowhere else in the world. So that's obviously a huge benefit to us as owners of two key tungsten projects that are both on U.S. soil and also in the great state of Nevada, which is a very mining friendly place to be operating.
Oliver, yes or no, how quickly, or can I should say, the U.S. become rare earth independent from China?
Oh, man, that's a good question. I mean, yes, we can. I mean, there's some great geology here. We need a huge amount of support from the administration, which we're seeing now.
Okay.
But we have to carry through. That's the biggest thing. We can't stop, start. If we have this same sort of support push forward over 5, 10, 15 years, the landscape will look a lot different. And the U.S. will become a lot less reliant on unfriendly countries for these key input metals.
Oliver Friesen, CEO at Guardian Metal Resources. Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
It's been a big week of retail earnings, and it's telling us a lot about the state of the U.S. consumer. Home Depot sales missed expectations. Walmart reported a rare miss on profit expectations. Target delivered a discouraging full-year sales outlook, and the list goes on and on. But we've got two wonderful reporters here to shed light on this and a lot more this afternoon. Jeanette Newman, Bloomberg News consumer reporter, and Jennifer Bartashas, Bloomberg Intelligence consumer team leader and senior retail staples and packaged food analysts are here to discuss. That is a long title. Sounds like she does a lot here. But Jeanette, I'll start with you. What are the latest retail earnings telling you about the state of the U.S. consumer right now?
I think overall that the U.S. consumer is actually doing okay. I think there's a note of caution looking forward because a lot of what's been sold in the last couple of quarters, price increases has not hit those goods, and so there's concern about when price increases really do start to flow through how consumers will will react. But despite some of the, what you mentioned, Nora, with the results, I mean, Walmart did have a profit miss. That's very rare. That had to do with some claims, but they actually raised their sales guidance for the year, which was already pretty high. So that shows that they do have some confidence in the consumer in the year ahead.
Hey, Jen, come on in here, because we spoke earlier with the CFO of Kava. Trisha Tolliver joined us, and she said last week, and she kind of reiterated today, that there's this fluid macroeconomic environment. These are her words. She said it creates a fog for consumers, and during those times, they tend to step off the gas. Would you say that that's the view you have at Bloomberg Intelligence about the consumer, that it's foggy, and as a result of that fog, consumers are pulling back a little bit?
Yeah, I think that's a pretty good insight. When we look at the consumer, and you look at sort of the bigger numbers in terms of the economy, the consumer is hanging in there, but the consumer's been conservative for a long time. It really started when we had high food inflation. And as soon as that started to roll back, we had pressure from tariffs, and there's just uncertainty. And when that consumer is uncertain, they still buy the things that they need to buy. They're still going on vacation, but they're just being a little bit more prudent. And until we have a little bit more clarity, we're not expecting that to really change.
Jen, what is the bifurcation that you're seeing at Bloomberg Intelligence when it comes to consumers, those at the higher end of the income spectrum versus what those at the lower end of the income spectrum are doing? And we've talked a lot for years about the K-shaped recovery, and it kind of sounds like we're still there. Maybe it's even more pronounced.
It's pretty pronounced. Lower income consumers continue to be pressured. When you look at retailers that really have a lot of those customers in their base, and that would be the Walmarts of the world, it would be Dollar Generals of the world, you see that the spending and the average ticket and the traffic into those stores, in some instances, is a little bit pressured. At the same time, higher income households are almost kind of going along as normal. They're still seeking value, but they're taking advantage of all the value that's being offered out to the broader economy, and they're saving money that way. So it's an interesting thing to track, and how those two different parts of the consumer base are really behaving a little bit differently.
And everybody loves a deal, right? And Walmart has actually, to what Jen's saying, Walmart has benefited from everyone loving a deal, and is attracting increasingly more higher income consumers. And that's part of what's helped boost its sales. And that's been a strategy. A lot of those consumers went to Walmart during the pandemic to get groceries, and then have increasingly kind of bought more and more. Walmart is stepping up its clothing offering. And so that's also, that's helping Walmart.
Right.
Are those consumers sticky with Walmart?
Yes, they are sticky, and that's been part of Walmart's success, because they go they go and they get the groceries, and then they see, oh, actually, like, Walmart has great jeans now. Mm-hmm. Walmart knows that these consumers are coming in.
That was an American Eagle reference, wasn't it? We're not going to get talking about the Sydney Sweeney ad. Okay,
please do not. Moving on.
Okay, sorry, go ahead.
Next chapter.
And that also is, Walmart has been seizing on that, and Target has been missing out. Target has not been doing well. They obviously just appointed a new CEO. He's an insider.
He was an intern. It's an amazing story.
It is an amazing story. It is an amazing story. But the market's not that impressed, though.
Yeah, so we're seeing. But I mean, you also come for companies like Estee Lauder. We talked about Walmart. Of course, we know that has a lot of those consumer staples opportunities there. But when we look at Estee Lauder and a lot of competitors like that on the more luxury end, what are the contours of consumer spending in that space right now?
Beauty overall is doing okay. Again, kind of still slowing down a little bit, but still riding a post-pandemic boom when we all got into, lots of different beauty products at one time. But Estee Lauder is not doing that well. So that's kind of like, even though the consumer right now is okay, a little bit conservative, like Jen said, but Walmart is doing overall really well. Target is not doing great. That's also because of differences with the two companies and how they're run. Similarly, L'Oreal, huge beauty company, obviously, is actually doing really well. Estee Lauder, no. Their sales in the most recent fiscal year that just ended were down 8%. And those are kind of internal problems that they've been dealing with.
Jennifer, I want to bring you back into the conversation here. Are we seeing any sense of consumer fatigue right now, especially when we know inflation's super high? And if you were to ask the average person, they do think that things are kind of tight right now.
I don't know that we're seeing a lot of fatigue. I think people have sort of adjusted to what is sort of almost a new normal. And that's a little bit post-food inflation. They've seen prices come down in different ways, especially on the grocery side and some of the general merchandise like entry-level fashion. And so I think that gives the perception of a little bit of relief. So I don't think people are really pulling back anymore, but they're not also simultaneously really loosening the purse strings. It seems like we've sort of settled into kind of this new normal range. One other note on Walmart that I think is pretty interesting: when you're talking about retention, you can't not talk about Walmart Plus, which is a huge loyalty program, and they're generating a lot of incremental revenue off of it. And people who get in there, they keep renewing, and it just locks in loyalty and locks in spending. And we're seeing that across all income cohorts.
Wait. Can you talk a little bit more about that? And I think what this is not an ad for American Express, but I will say if you have a certain American Express card, you can get a free membership to the program.
Which one do you want to?
I think it's the platinum card, I believe.
Okay.
Yeah, I believe that's what it is. Thanks, Nora, for calling me out.
We actually just completed a survey of 1,000 Walmart Plus subscribers. And what's really interesting is that 83% of Walmart Plus subscribers also have an Amazon Prime membership.
Wow.
But that doesn't stop them from maximizing their Walmart Plus value. And so I think that it really illustrates how Walmart has very uniquely carved out a service and a recurring revenue stream that is really pretty remarkable. And that the fact that a lot of the people who are in that program are making digital orders, that's driving their digital revenue for advertising. And it's really adding to just the overall flywheel of Walmart. So there's a lot of really interesting things happening that are really stemming from some of these intelligent decisions they made maybe 5 years ago to introduce that Walmart Plus program.
That's a fascinating thing to hear, because it was always sort of an also ran when it comes to Amazon Prime. So it's interesting to hear that. Jeanette, I want to bring you back in here and talk a little bit about Target. You mentioned the CEO change, the news we got earlier this week. You said investors didn't love it. A lot of the conversation around Target over the last couple of years, well, actually really over the last year or so, has had to do with backlash against DEI efforts, and to what extent, in your view, that actually affected company sales or the image of what that looked like for consumers. What do we know about this?
The company executives at Target have said that the backlash, like black consumers not shopping at Target, has had an impact on sales. They have not quantified that, and so we don't really know. These kinds of boycotts don't often have a huge effect, but they have said that it had an effect. And I think also more importantly, even in some of the analyst notes, and you hear investors talking about the staff at Target, we've had some reporting. It's nearly 60% of staff at Target are people of color. And so the staff itself has been, upset by everything that's been going on with Target pulling back on DEI. And that is something that some people think is kind of behind some of this tumult with staff. A job in retail is so difficult, and you need especially now, and you need great staff, and you need people who are going to stick around and they know how the stores work. So that has also been a problem, whereas you don't hear those same complaints from staff at Walmart, for example. They've also been, increasing the salaries that they're paying their top employees. So that is also an issue at Target, is the issue with staff.
Well, we love talking retail and the consumer with both of you. Thank you so much for joining us. Jeanette Newman, Bloomberg News consumer reporter, and Jennifer Bartashis, Bloomberg Intelligence consumer team leader and senior retail staples and packaged food analyst. Check out Jeanette's reporting on the Bloomberg Terminal and Jennifer's research on the Bloomberg Terminal, also, of course, at Bloomberg.com.
This is the Bloomberg Businessweek Daily podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.